Good morning, everybody. How lovely to see you all. Beautiful Friday morning at the moment. Apparently it's going to rain later, but hey, never mind. Doesn't really matter. So how are we all doing? We're on week... actually, I don't even know what week of lockdown we're on anymore. I'm so confused about what we're supposed to be doing, what we're not supposed to be doing. I know I've got a lot of clients who are starting to go back to work as of next week. I've got a lot of other people who are beginning to unfurlough their staff as of the beginning of July, which obviously isn't very far away. So there's a lot going on. There's a lot of uncertainty, there's a lot of anxiety, but it's going to be okay. It's going to take time. I was reading a BBC article today about recession and what it means and how it affects people, and it's going to be a bit tough. It is going to be a bit tough. So we need to do what we can to make sure that our businesses are all okay. So I know tax is not exciting by any manner of means, but I'm hoping that when we go through what we're going to go through today, I'm actually going to help save you some pounds and make you slightly more efficient with your tax so that you don't have to worry about it. I have various clients and or various people actually who aren't clients yet, but may well be, who say that tax and accounts gives them a vague sense of panic all year round until they've done it and sorted it out. So, tax, what is it? Why do we have to pay it? What does it all mean? So there are so many different types of tax. There's income tax, there's VAT, there's corporation tax if you're a limited company, there's capital gains tax, there's inheritance tax. So there's basically a lot of money that the government tries to get out of you. What I do is I try and help you not pay quite so much tax as you have been, hopefully. Make sure that you are claiming for every possible expense that you can in order that you can reduce your tax bill each year. And also to explain things so that you've got time to save up for your tax. I like to get all of my clients, or the majority, I'll say, of my clients' tax returns in and submitted and accepted by HMRC by July, August, if I possibly can. If they've got a payment on account, which we'll go into in a minute, then we do it after the July payment on account is made, because otherwise it gets very, very complicated for HMRC and they make a complete mess of it usually. So when it comes to taxes, there are two types of people. We've got the ones that are proactive with the tax planning, who secure a good tax professional like me. They usually reap the benefits of having less tax liability and they're left with more money in their pocket. Two are the ones that they fail to tax plan. They don't necessarily see the benefit of having a good accountant or tax planner, so they don't use it. They do it themselves. They quite often leave it till the very, very last minute, and then suddenly they've got this huge, great big tax bill which they've got to pay by the end of January, and how they're going to have the money to do that. Oh god, that's a bit scary. So there are so many issues surrounding tax, and there is so much mindset surrounding by tax as well. There are an awful lot of people who are just so scared of doing their accounts and getting their tax return done because HMRC have so much power and they don't want to put anything in there until the last possible minute, just in case HMRC can change things around or whatever. The sooner that you do it, the more money you're going to save. There's a very, very simple reason for that. There are, which we'll go through in a minute, but there are huge amounts of ways that you can actually save money by paying your tax bill early. If you pay your tax bill early, or you pay it in advance, you are going to get interest back from the government. Interest is obviously not going to be huge amounts at the moment, but the fact that you have submitted your tax return early means that you don't have to worry about it anymore. It's gone. You can forget about it. It's wonderful. It's done. It's dusted. If you also happen to put aside money for your tax on a monthly basis, quarterly basis, whatever it happens to be, then obviously you will already have that money saved up to pay your tax bill. Again, another worry off your shoulders. We all have enough worries and enough hassles in our life to not have to think about tax as well. I run various courses, and one of them is putting profit first, paying yourself what you deserve. And one of the things that you have to do, actually one of the things that you're supposed to do as my client anyhow, is to put a certain amount of money aside every time you receive any income into a tax account, so that it's there to pay your tax bill or your VAT bill or your corporation tax bill, whichever it happens to be, or whichever combination it happens to be. But the way that the Profit First works is you save a certain percentage into a profit account, an owner's pay account, and your taxes account. So not only are you saving up for your taxes, but you're actually paying yourself a profit out of your business. Now, it makes no difference if you're making a profit out of your business or not. It makes no difference if you have a minute income. It makes absolutely no difference. Hi Denise, lovely to see you. Thank you for checking in. So yeah, it makes no difference what size your income is. You can have a minute income, but the point is that you get into a habit of putting a percentage into an account for your profit, your owner's pay, and for your taxes. If you start to do this on a fortnightly basis, you will start to really reap the rewards. You will also start to realise that by the time you've submitted your tax return, you've already got your money saved up. You don't have to worry about it. You don't have to scrimp and save and think, oh my God, how am I going to do this? I've got less than a month to do it because I've only just submitted my tax return in the beginning of January. How am I going to do this? The way I start with my clients is we get everything up and running and sorted by preferably the end of June, if not the end of July. So your tax return is in. It gives you 6 months to save towards your tax bill. Now, because I've been doing Profit First, hi Kate, lovely to see you. Because I've been doing Profit First for the last 2 years, I've now got in my tax account, I have already saved up for my corporation tax, which doesn't have to be paid until December this year, and my personal income tax, which doesn't have to be paid until January next year. So anything that I'm saving through my Profit First allocations is going towards the following years. So as my business builds up and up and up and up, the percentages grow as well, but the amount of money that you've got coming in, because it's done on your income, not on what's in your bank, it's done on your income percentage, you start to save immediately. So I had some people on the course at the beginning of May. We're just about to do their second profit allocation today, which is really exciting. Now, there were 10 people on the course, and on an average, and bearing in mind that we are in the middle of COVID, it's really tough at the moment. There's a lot of people not making huge amounts of income, if any income at all, but they are making something. So there is something going into their profit accounts. Some of the people on the course only had £1.50 going into their profit account, but it's better than nothing. There are other people who have emailed me since and said, do you realise that since I've done this, I've now actually, for the very first time in 6 years of being in business, I have now actually got some money in a profit account, which is going to be mine when I do the distribution at the end of this quarter. I am so excited. This is the first time I've ever been able to pay myself what I really am worth. And the difference it makes to your self-worth is just unbelievable. You increase your self-worth, you increase your net worth. That's my new saying at the moment. Anyhow, taxes, sorry, to go back to taxes. So there are loads of ways that we can save taxes. Are we actually claiming as many expenses as we possibly can? Do we know what the calculation is for our use of home if we're working from home? There are so many different expenses that you can put through that you might not have thought were possible. So, 1, claim your taxes. That's tip 1. Tip 2, do not forget to pay yourself. If you're a limited company and you're on the payroll, any salary that you're paid is a legitimate expense. Therefore, it reduces your net profit. Sorry to use the jargon, and therefore the least amount of corporation tax that you have to pay. Are you taking out what you need? Is it nearly the end of your year? Should you go shopping? Yay, we can all go shopping. No, the point is that you can go shopping, you can go and buy loads of equipment if that's what you need before your year end. Then you can start depreciating it using capital allowances, which your accountant will do for you. And tip 4, give HMRC a surprise with an early payment and they will owe you interest. It won't be huge amounts of interest, but it will be interest. So what is tax, when is it due, etc. Most of us probably know that our self-assessment tax return is due by the 31st of January, as is our payment. If you're doing your tax return early and you're going to get a refund, they're incredibly quick about paying refunds. So the sooner you get it in, the sooner you'll know whether you're going to get a refund. And again, it takes that worry off your shoulders. It gets it all done, dusted, sorted. Corporation tax is always due 9 months and 1 day after your year-end date. So your year-end has been the 31st of March. Your tax is due on the 1st of January. Not a very nice time to have to pay your tax, but hey. VAT. VAT is quarterly or annually, depending on what scheme you're on. And one of the most important things to understand if you're paying self-assessment, and a lot of people don't get this when they first set up a business, is what is payment on account? How does it work? It's one of the most commonly misunderstood elements of the tax self-assessment process. Payments on account are tax payments made twice a year by those doing a self-assessment. They are to spread the cost of the year's tax, the following year's tax. They're calculated based on your previous year's tax bill, and they're paid in 2 instalments. So, for instance, your tax bill for 2018-19 was £3,000 as a rough idea. Okay, you made 2 payments on account last year, the previous year, of £900 each, i.e. £1,800 in total. Why did you do that? Because you're paying towards your 18-19 tax year. So your tax year bill is £3,000. You've already paid £1,800 towards it. So therefore the difference is what you pay as your, what they call your balancing charge. Everybody who has a tax bill of over £1,000 will have a payment on account. It is almost always worked out on what your previous year's tax bill is. It's very, very important that you budget for this as well. So when you're putting aside your percentage, whatever percentage you're putting aside for your tax bill, make sure that you are covered for your payment on account. Again, it's another reason to make sure that your tax return is done. Also, if you do your tax return before January, certain accountants will charge you more during January to do your tax return because it's their busy time. I don't charge more unless someone gives it to me on the 25th of January, which 1 or 2 of my clients do, which they get bollocked for every year. Excuse my language. But actually, what I'm trying to do now is to get as many of my clients' tax returns done as soon as possible during the year. 1, so it's better for their tax than their cash flow, but 2, so that I don't have so much to do during January. So it's quite sort of, well, that's how it is. So if you can get your tax return in and done before, then that's absolutely brilliant. Any questions? Does anybody have any questions on tax? Does anybody want to ask me any questions about it or about the Profit First model? I will be running the course again in probably September. At the moment I am doing one-to-ones. If anybody is interested, done for you situation I can do for you as well, so that you give me your figures and I work out your Profit First allocations, and I set it all up for you so that it's up and running and sorted, so you don't actually have to do anything apart from fortnightly. You come onto a Zoom call with everybody else who's doing the Profit First allocations, and we all do our allocations together, and it's really exciting, especially on a Friday, to be doing it. So if anybody would like some information about it, please ask. Pop your comments in the comment box. Lovely to help if I possibly can. And I'm here to help at any time. Thank you so much for being on today, and have a fabulous weekend. Bye.